Welcome back. This week we've been discussing real estate in the Triangle. Jason Harris is a lender with Advantage Lending, and he's here to give us some insight on the ins and outs of mortgage lending. And Jason, welcome to the show.
Thanks for having me, Bill.
Well, maybe just a quick overview of what folks who are watching the program today and thinking about buying a home, what are some of the tips you might have when it comes to choosing a lender?
Well, so the quick overview of it, a lot of people are intimidated, almost overwhelmed by the process when they shouldn't be. It's supposed to be exciting buying a home. And, it's good to get with a lender on the front end. We recommend getting with a lender maybe 3 to 6 months before you go and start looking for a home to get pre-approved. Now, the pre-approval is really where the rubber meets the road, so to speak.
Let's talk about that, if you don't mind me interrupting, because I think what you're talking about here is really, really important, because most people don't do that, do they? They go out and find a house, they get a pre-qualified letter, which means nothing, right?
No, so there's definitely a difference between a pre-qualification and a pre-approval.
Would you mind telling us why, what that difference is, and why that's important?
Well, the pre-approval, we're going to dig a little deeper. It's going to be a little more informative. I like to call a little bit of Mortgage 101, if you will. We're going to go through, decipher what the best loan program is for the individual buyer's needs, and from that we can derive where they need to be looking at price point wise. Because the price point is going to derive the payment as far as it fits in their budget, and get a handle on where they need to be financially as far as the down payment and cash to close requirements.
So if they do that, when they leave you, they know what they can afford.
Absolutely.
They are looking at homes that they can afford rather than homes they can't afford.
Well, Bill, knowledge is power.
Yeah.
And what it does is it empowers them to go out and give them the confidence to make the best decision for them and their families.
Well, real estate agents must love you, man, because that's
we
the way
like to think so, Bill.
Yeah.
And because we're such a stickler on the pre-approval, that enables the process to be much easier on the back end. There's no surprises, the deal's closed, no stress. That's why it's imperative, and the most important part of the process is a good upfront, concise pre-approval.
Does that give the buyer a certain advantage? Let's say we just talked about how hot the market is. If they're pre-approved versus someone who isn't, does that give them a leg up, especially if they are bidding on a home?
It does, Bill, because if we do the pre-approval properly, we a lot of times have a lot of the documentation needed, and that enables them to close in, say, as little as 3 weeks. That's definitely a bargaining chip when they're looking to buy, and us being a local lender, that helps also, because they know, hey, we're here. They know where to get their hands on us if they need us.
What affects the interest rate? I mean, because it's been historically low. It's still pretty low, isn't it?
Correct, Bill. Correct.
So what and why does it fluctuate the way it does?
Well, Bill, you can look at mortgages. The mortgage-backed securities are almost like stocks, right? They're investment instruments. So they're freely traded. So they can raise and go down and up, kind of like the stock market every day. Right. What's been driving the rates up recently is the Federal Reserve kind of unwinding and raising their key interest rates through policies they enacted during the Great Recession afterwards, trying to stimulate the economy. So as the economy improves, you're seeing interest rates return to more normal levels. But they're still great, Bill. Still great. Still hovering around 5%, and historically that is absolutely fantastic.
See, I remember a time we were buying homes, I think it was like, gosh, it was in the teens.
And you thought you were getting a deal, probably.
Well, probably, yeah. So, I mean, it is a great time to buy. For folks who are thinking about this, how does that interest rate, I imagine your credit rating also plays into it?
Yes, sir.
As well, and your job and income?
Yep, your ability to repay absolutely affects the interest rate. Yes, sir.
All right, so what about trade? How does that affect mortgage rates?
Well, yeah, but you may have seen in the news the talks of trade wars. Well, if we go into a trade war, the cost of goods are going to go up. And that, by definition, is inflation, and that's the enemy of long-term interest rates, because rates have to rise to keep up with the inflation. So that won't be a good thing, but let's hope all that settles down.
So are mortgage rates currently rising?
Yes, Bill, we're definitely in a upward trend as interest rates go, but it's normal as the economy improves. But again, 5% is still fantastic. They've crept up, pretty substantially a year, about 1 percentage point. For 2019, we don't think it'll be as significant, but they are definitely trending upwards. So now is the time to buy.
I was going to say, if you are thinking about buying a home, 5% sure beats what it was back in 1971. In fact, let me ask you that, because I alluded to it in the 70s. Wow, that was tough. The interest rate was really just incredible. How do these rates compare?
Well, you just a little food for thought. The average rate, since they started tracking it, the National Mortgage Association in the early 70s, the average rate is 7.65%. So even though we're being kind of spoiled, right? You alluded to it. I mean, the last decade we've been at rock bottom low rates. They're simply not normal.
Right.
So even at 5%, unfortunately, perception is reality. So we have to overcome that. People are like, man, 5% is high. But folks like you understand, no, it's actually a really sweet deal, and it gives the buyer a lot of power as far as buying power. And it's just, it makes it a great time to buy, maybe a once in a lifetime opportunity to lock in these rates.
Yeah, explain that when it comes to buying power compared to the 70s, having that high interest versus the low interest that we have today.
Oh, gracious. Well, even if you look at a nominal loan, let's just say $250,000. $250,000 loan, if the rates go up 0.5%, that's like $90 a month.
Wow.
You do the math on that, I mean, that could be $1,200, a year. It really affects buying power, especially when you talk about the way homes are appreciating. If you wait to buy, you're only going to pay more, unfortunately, when you have a high appreciating market like the Triangle, coupled with the rising rate market.
So what would you tell our viewers, those who might be thinking about jumping in, getting out of an apartment and buying a home?
I'd say go for it. There's no better time than the present. The economy's improved. Folks are back to work. It's definitely a great time to buy. Get with a local trusted lender. Get pre-approved on the front end. It's so important. It's so important to use a trusted local advisor. Online's great. I Google everything, Bill, but this isn't buying a pair of shoes. There's a lot of misinformation out there. Get with a local trusted advisor.
That's some good advice. That really is. Well, you stay right there. We're going to get Kevin back as well. And don't you dare go anywhere. We got lots more to talk about.